Hello and welcome. This is Cheston with Buy the Books Consulting, and I want to talk to you about loans and how to, as a small business owner doing your own bookkeeping, financial reporting, how to account for loans when they when you get them, when you get approved for a loan and you actually get credited the funds, you get money in your account. I just realized that some people don't really understand how this works as business owners. All right. So it's really straightforward and simple. The concept is you create a liability, and the liability is what funds your account, right? So the new loan is really a new balance sheet account that you need to set up on your books. And those funds from that new loan are what the source is for the funds that actually show up in your checking account or whatever account it is that you receive the funds in. Okay. The other aspect of loans that I see a lot of confusion about when I'm speaking with small business owners is loans from shareholders to the company. A lot of times we have these shareholder loans that show up on a balance sheet, and they show up in a section of the balance sheet where they don't necessarily belong. One, these shareholder loans are anything from shareholder activity wise is really equity. Okay. And the loan portion of that, if it is a loan, really needs to have supporting documentation for it to be compliant as a loan on your books. So if you have a loan from yourself to your business or one of the partners or shareholders to the business, you really do need to have a loan agreement, some type of note that indicates that there is a real existing loan from that shareholder to the business. Otherwise, if you are subject to an audit, then they're going to ask for documents. If you don't have those documents in existence, it's going to be a compliance issue. Okay. All right. So really what I want to do here quick is to show you what the process is for receiving a loan, and when you actually have funds distributed into your checking account or bank account from the loan proceeds. Okay. So anytime you get a loan from whatever company, whatever bank, whatever institution, whatever private lender, whoever it may be, wherever it may come from, we're going to go to add it to our chart of accounts. So let's say you get a bank loan. Come here, click on new. And let's say it's a loan that you're going to pay off in 7 to 10 years. Maybe it's an SBA loan with a multi-year term on it. So we're going to come over here and create another liability, long-term liability. Any type of loan that's payable in a term that's longer than 1 year, we're going to put into a long-term payable account. And the first thing that comes up is notes payable. That's fine to choose as an account within your QuickBooks if that's what you're using. And we're going to go ahead and name this account whatever it is. Maybe it's an SBA loan. So let's say SBA loan. All right. So we're going to do that. We're not going to give it an opening balance at this point in time. We're actually going to create the transaction, the transfer as per the date that you received the loan. All right, so you're going to click save and close. So to show that that loan has provided you funds, let's say the loan that you got was for $100,000. You can go here quick and simply. This is probably the simplest way to do it, is to go here to new transfer. You're going to choose that SBA, the new SBA loan account. and you're going to distribute the funds into whatever your checking account is. Let's say it's $100,000 that you received from the lender. And let's say you received it at the beginning of the week. Choose whatever date that you received the loan. And what I would do here is any type of a loan document that I have associated with this loan, I would just drag it and drop it and attach it to this transaction for record keeping purposes. And we come over here and click Save and Close. So now we see that our bank account has increased by $100,000, and we have a new long-term note payable for $100,000. All right. So if you receive a loan from a bank, from a lender, from anybody, this is the simplest way to do it if you're managing your books for yourself. Okay. The other thing is if you do have something like from a shareholder position, let's say you borrow $10,000 from yourself. So you loan $10,000 to your business, and you want to make sure that's showing up on your balance sheet. Most of the times, or more times than not, I'm going to recommend that this transaction be attributed to just contributed capital, because for small business owners, that's a lot of the times the simplest route to go. And it would just be another equity account that you add, or another transaction within the equity account. So what that looks like, if you're not familiar with the equity transactions, is that you would have an account here for owner equity, shareholder equity. If you don't have it already pre-existing on your QuickBooks, and more likely you do, it's a default account with most business setups, you would come here and add the account for your equity. So normally I would, like if you have a partnership or even an S Corp, you can actually do this partner contribution chart of account. It's good to use this, or you can just choose this basic owner equity, a detail type, and you can change the name over here. Maybe it's partner A, shareholder equity basis. And normally, like how I would track this is I would have a sub account underneath this for contributions and distributions, so that those are clearly identified. It definitely helps out come tax time when you're talking about adjustments to basis. But for this example, I'm just going to keep it pretty simple and straightforward. We're just going to have this shareholder equity basis account, save and close. And if I'm going to put money into my business, I do another transfer, right? Just come here real quick and easy, just transfer. Let's say I want to put $10,000 into my business. So I transfer it from shareholder equity, the account that I just created. And then I would put the funds into my checking account. And the amount would be $10,000. Let's say I'm doing it today. And I would just hit save and close. And now we can see our bank balance increased by $10,000. And we've also increased our equity in the company by $10,000. All right, so that's a quick and simple way to handle loans and contributions, personal contributions to your business. All right, so hopefully that's helpful. If you have any questions, you can leave them down in the comment section. Yeah, definitely subscribe and like the video for more content like this if you do find it helpful. All right. And I will see you in the next video. Take care.